Moldova emerges as Europe's new energy investment hotspot. Geopolitical pressure has reshaped Moldova's energy landscape, forcing rapid innovation and opening new doors for energy investors. Once wholly dependent on Russian gas, Moldova now generates over a third of its electricity from local renewable sources. As of April 2025, 36% of the country's electricity is produced domestically, primarily from solar, followed by wind, marking one of the fastest clean energy shifts in Europe. This transformation was not born of strategy, but necessity. After Russia's 2022 invasion of Ukraine and subsequent weaponization of energy supplies, Moldova moved quickly to reduce reliance on imports. Just 4 years ago, the country had under 100 megawatts of renewable capacity. Today, that number exceeds 750 megawatt, with solar power accounting for 529 megawatts. While Moldova's energy independence efforts started as a response to crisis, it's now evolving into a scalable, investment-ready ecosystem. Government contracts, regulatory reform, and cross-border trade with EU markets are all contributing to what could be Eastern Europe's most dynamic clean energy environment. Grid infrastructure and storage, the next wave. Despite rapid growth in solar and wind, Moldova still faces a core infrastructure challenge: energy balancing. With limited capacity to store or redistribute excess power generated during daylight and windy conditions, the country remains reliant on imports during evening hours or low-output periods. This mismatch has created a demand curve for battery storage and grid balancing solutions. Premier Energy, Moldova's largest energy provider, is preparing a slate of tenders focused on these areas. Country manager José Luis Gómez Pascual notes that battery deployment is central to unlocking the full value of renewables, particularly in the absence of real-time energy pricing. That's set to change. Moldova plans to launch its National Energy Market Operator, OPM, in late 2025, based on Romania's established OPCOM system. Once operational in 2026, OPM will introduce hourly spot pricing, finally making storage assets financially viable for private investors. This structural shift could catalyze a new wave of market entries in both battery storage and smart grid technologies. October will also bring a major tender round covering renewable capacity plus integrated storage, supported by EU funding. For energy firms with scalable solutions in solar plus storage or software-defined grid technologies, Moldova may represent the most accessible testing ground in Europe right now. Diverse market entry points for investors. Moldova's regulatory environment has evolved in ways that lower the barrier to entry for a range of investor profiles. From large-scale tenders to fixed-rate programs for small producers, the landscape now accommodates both institutional capital and smaller entrepreneurs. The Ministry of Energy has laid out a strategy focused on 3 pillars: security, affordability, and market competition. This framework is producing real commercial pathways. 105 megawatts of wind and 60 megawatts of solar tenders were recently approved, with 15-year fixed-rate contracts, ensuring long-term price stability. Moldova is opening its energy market to smaller investors through regulated solar programs with 15-year contracts, capped capacity, and modern equipment requirements. New models like energy communities, regulatory sandboxes, and market aggregators such as Navitas Energy are enabling broader participation, while local businesses like bakeries are investing in solar to cut costs and boost exports. Moldova may not be the first market that comes to mind for clean energy, but its current trajectory is impossible to ignore. With real policy shifts, EU backing, and a growing appetite for private sector innovation, Moldova is shaping up to be a proving ground for renewable and storage investments in Europe.